The SEC is officially opening the door for XRP to big traditional money, and Rowe Price is filing for a new actively managed crypto ETF. XRP is explicitly listed alongside Bitcoin and Ethereum as an asset the fund can hold, and the decision deadline for this application is February 26, 2026. The real question is not whether XRP will pump on that date, but whether you understand what is actually happening in the SEC's documents and how the market will trade it, because at least one major traditional finance player is ready to hold XRP inside a regulated product, and that already changes the rules of the game. Imagine this: a conservative giant like Rowe Price, which has managed trillions in traditional assets for decades, comes out and files for an actively managed crypto ETF. In that official filing, in the list of assets the fund is allowed to hold, right next to Bitcoin and Ethereum, you see XRP spelled out as an eligible asset for the portfolio, not as a rumor, not as maybe one day, but as a clear named position. Now look at the calendar. The SEC has designated February 26, 2026 as the date by which it has to act on NICE ARCA's proposal to list this fund, meaning it must approve it, disapprove it, or move further into formal proceedings. Around this date, social media has already launched the narrative, SEC has 4 days to decide on XRP, with people drawing moon targets and disaster scenarios, but as usual, the legal reality is more complex than the headlines. So let's strip this down to what is actually happening. There is an SRO filing from NICE ARCA, the exchange that wants to list and trade shares of the Rowe Price Active Crypto ETF under Rule 8.201E, which covers non-generic commodity-based trust shares. This filing is labeled SR NICE ARCA 2025-77. It is publicly posted on the SEC site and in the Federal Register, and anyone can read the structure, risk disclosures, and, most importantly for us, the list of eligible assets. Inside that list, XRP is explicitly named among the crypto assets the fund may hold, together with BTC, ETH, SOL, ADA, AVAX, LTC, DOT, Doge, HBAR, BCH, Link, XLM, SHIB, and others. That means Rowe Price, in an SEC-facing document, is telling the regulator and the market, we are prepared to hold XRP inside this ETF as part of our actively managed crypto strategy. The SEC, on its side, is not acting on Twitter threads, but following its standard procedure. It publishes the notice of the proposed rule change, sets out an initial decision period, can extend that period, and has the authority to institute proceedings to determine whether to approve or disapprove the proposal. In this case, the SEC has already issued an order instituting proceedings for this filing, which means it is in active review mode, collecting comments, asking questions, and focusing on issues like market manipulation, surveillance sharing, and investor protection. This is where the date February 26 comes in. In the Federal Register, the Commission states that it has designated February 26, 2026 as the date by which it shall either approve, disapprove, or institute proceedings to determine whether to disapprove the proposed rule change to list and trade shares of the Rowe Price Active Crypto ETF. The nuance is important. The law gives the SEC room not only to say yes or no, but to deepen proceedings. And that part is what a lot of hype posts conveniently skip over. If you look deeper into the SEC docket, you also see that the agency is accepting public comments up to February 23, 2026, with rebuttal comments due by March 9, 2026, which clearly signals an ongoing process rather than a clean, final showdown on one single day. So when someone screams online that the SEC must approve or reject an XRP ETF on February 26, they are compressing a real, multi-step legal process into a single dramatic soundbite. Now, where exactly does XRP fit into this story? This is not a pure spot XRP ETF focused solely on one coin. This is an actively managed crypto ETF that can hold a basket of assets, and XRP is one of the officially allowed components of that basket. On a practical level, that means a heavyweight like T. Rowe Price is structurally ready to buy and hold XRP inside a product that trades on a major U.S. exchange under SEC oversight. For institutional players that care about compliance and optics, this matters. If a firm like T. Rowe Price is comfortable enough to put XRP into the eligible assets section of a regulated product, that chips away at the old narrative that XRP is untouchable for serious money. For the XRP market, it means a potential new channel of demand, not necessarily explosive on day one, but persistent and integrated into the traditional financial system's product stack. You can already see how this plays out on X. There are posts saying things like T. Rowe Price has filed an S1 for an actively managed crypto ETF, identifying XRP, Litecoin, and Shiba Inu as eligible assets for the portfolio. And that description lines up with what is in the documentation. The jump from eligible asset to this guarantees a moonshot is where speculation begins and facts end. While this institutional narrative is building, the market is not standing still. Currently, XRP is trading roughly in the $1.42 area, with around $1.3 billion in daily volume and a market cap in the mid-80 billions based on circulating supply. These are big cap numbers, and at that scale, any new institutional access vector, even via a multi-asset ETF, is treated as a structural development, not just a minor listing. But price is never driven by fundamentals alone, especially around regulatory dates. Around February 26, traders are going to be playing three main scenarios. In the bullish scenario, the market leans into the institutional angle. Price holds its ground into the date, reacts positively to any constructive or even neutral language from the SEC process, breaks local resistance on real volume, and, crucially, does not immediately give it all back. This would show that participants are willing to bid XRP on the back of the idea that more regulated products with XRP exposure are on the horizon. In the bearish scenario, you get the classic pattern: buy the rumor, sell the fact. The market overpositions into the date on a mix of misunderstood headlines and outright hopium. Then the SEC's communication ends up being dry and procedural, maybe just extending proceedings or asking more questions. Price spikes up into that headline, runs into heavy selling, and snaps back below key levels, with red volume bars showing larger players offloading into late buyers. The third and very common scenario around SEC milestones is chop. Instead of a clear trend, price whipsaws up and down, triggering stops on both sides. You get fake breakouts, quick reversals, and after a few days, XRP is still somewhere near its starting range, but a lot of leveraged traders have been cleaned out. This happens because for big players, farming liquidity and selling volatility can be more profitable than betting on a straightforward directional move when regulatory uncertainty is still high. All of this is happening against a backdrop of an information war on social media. You will see captions like SEC has 4 days to decide on XRP or XRP ETF decision on Feb 26, which blur the line between an actively managed multi-asset ETF that can include XRP and a pure spot XRP ETF. You will see screenshots from filings and from the Federal Register used as proof for conclusions that the documents themselves never actually state. Your edge here is simple. Keep going back to what is actually written. Fact: T. Rowe Price filed for an actively managed crypto ETF and explicitly listed XRP among the eligible assets. Fact: the SEC has designated February 26, 2026 as a key deadline in its review timeline and has already instituted proceedings, with comment deadlines stretching into March. Anything beyond that is a scenario, a narrative, or a trade idea, not a fact. So how do you approach this as a trader or investor? First, separate the event from the reaction. The event is the SEC's process around NICE, ARCA, and Rowe Price's ETF filing, and the fact that XRP is structurally included in that story. The reaction is whatever price does in response, which might be a pump, a dump, or a messy sideways chop. Second, do not build your entire plan on one binary outcome. You want to have a playbook for bullish follow-through, for disappointment and sell-off, and for high volatility range trading, instead of telling yourself that one candle on February 26 will define the entire future of XRP. Third, if you see yourself more as an investor than a short-term trader, zoom out. For a long-term XRP holder, the core significance of this story is that XRP is slowly being woven into the fabric of regulated institutional products. One SEC procedural step on one date can jolt the market short-term, but the bigger picture is about how many such products appear over the next 1, 2, 3 years, and how large they become. Finally, anchor your narrative and your own decisions in what the documents actually say. You can always come back to a simple line. XRP is named as an eligible asset in an SEC-facing ETF filing by a major traditional asset manager, and the SEC is actively processing that filing within its formal rulemaking framework, with February 26 as a key date in that timeline. How the market trades that reality is another story, but that underlying shift, from courtroom controversy to being quietly built into TradFi products, is exactly the kind of thing that can redefine how XRP is perceived in the years ahead.